US government shutdown averted and a possible trade deal extension helps global equity markets to 10-week highs. US Trade Representative Lighthizer and Treasury Secretary Mnuchin travelled to Beijing this week for talks with Chinese trade officials, including Vice Premier Liu He, ahead of a March 1 deadline. The date is critical, as if no agreement is forthcoming, the duty on $200 billion of US imports from China will rise from 10 to 25%. While the talks continue today, in a positive sign, the South China Morning Post suggested that President Xi may join the talks. No final agreement is really expected. Rather, press reports have emerged suggesting that while the two parties remain far apart, enough progress has been made to extend the deadline, perhaps by as much as 60 days. That would be good news for the global economy, and that was one factor that helped equity markets to highs back to early December this week, with the S&P up 9% year to date. The other factor that added to the upbeat sentiment was that Trump confirmed he will sign a funding bill that will avoid another costly government shutdown, though he will declare a national emergency to bypass Congress and secure funds for his border wall. And as if we needed a reminder of how costly the record US government 35-day shutdown that extended through December last year and January this, US retail sales posted a steep 1.2% fall in December, the largest monthly decline in 9 years and well below consensus expectations for a 0.1 gain. The fact that we'll avoid another shutdown is therefore good news for the US economy, though the size of the December retail sales fall saw US 10-year bond yields drop by 7 basis points